Welcome. If you're here, you want to get straight to what matters. Today, we're doing a deep dive into this preliminary trade agreement, the one between the U.S. and China, just announced out of Geneva.
Yeah, it's a big deal. The aim seems to be dialing back those trade tensions that have been, escalating. Things like the IP disagreements, trade imbalances.
Right, which led to those massive tariffs we saw. And this could obviously have a ripple effect on global markets.
Definitely. We've looked at the initial news reports, some market analysis that came out right after.
And our job today is to, well, cut through the noise for you, give you the key takeaways.
It's useful to remember the context, right? We had these really high tariffs. The U.S. was hitting up to 145% on some Chinese imports.
And China was firing back, up to 125% on certain American goods. That created a lot of friction.
A huge amount. So, okay, this agreement, it signals a shift
The reports say it's a phased reduction, so step by step.
towards hopefully something a bit more balanced. But yeah, the key word is preliminary.
Absolutely. Crucial to remember.
And beyond just the numbers going down, there's this other piece, a new trade consultation mechanism.
Okay, what's that about?
Think of it like a dedicated hotline, a platform for ongoing talks specifically about tariffs.
So it's not just fixing the current problem, it's trying to build something to stop it happening again.
Exactly. To prevent future escalations, that seems to be the goal. Long-term stability.
That sounds pretty significant.
It is. And you saw that reflected immediately in the markets. I mean, U.S. stock futures just surged.
Right after the announcement.
Pretty much instantly. It suggests, a wave of investor relief, maybe? A feeling that some uncertainty is lifting.
Okay, let's get specific. For anyone tracking their investments, this is where it gets interesting.
Yeah, the Dow Jones Industrial Average futures, they shot up over 530 points. That's, 1.3%?
Wow, okay.
And S&P 500 futures up 1.4%. NASDAQ futures climbed even more, 1.6%.
That really tells you something about how the market perceived this news. It wasn't a minor blip.
No, definitely not. It points to maybe a psychological shift. Now, looking ahead, sectors to watch. Technology and agriculture come to mind immediately.
Why those two specifically?
Well, tech involves those really complex global supply chains, plus intellectual property is always a big issue there.
Okay.
And agriculture, well, that's often been right in the crosshairs of these trade disputes, hasn't it?
Makes sense. So if you want concrete things to track, we saw Apple, AAPL, trading around $198.53 after the news.
And Alibaba, BA, that was at $125.33. Both big players, obviously very exposed.
Right. And for a broader market view, ETFs.
Yep. The SPDR S&P 500 ETF, SPY, that was sitting at $564.59.
Okay.
And for China exposure, the iShares China Large Cap ETF, FXI, was at 34.855 cents. Again, these are the prices right after the announcement came out.
So just to wrap up, we've looked at the immediate fallout from this preliminary U.S. China trade agreement from Geneva.
It's clearly just the first step. The situation is still developing, of course.
We'll keep tracking it.
Right.
But for now,
Yeah, maybe a final thought to leave you with. It's fascinating how that immediate market surge kind of reflects this deep-seated belief, doesn't it?
a belief in what?
That stability between these two huge economies is just fundamental for global economic health. It
Yeah.
really underlines how interconnected everything is now.